which is actually month 25 of 2020. 2020 just won't end. But here we are, and we're going forward, and there's lots to discuss in the world of business, and the Chamber's here for you to try to bring you topics that are interesting to you and helpful to you in your business. Always, please, let me know if you have an idea for a speaker or a topic that you'd be interested in. We had this discussion with Rick, gosh, probably 5 or 6 months ago, and at the time I hadn't heard that much about cryptocurrency and Bitcoin, and once we booked him as our January speaker, I just began to hear more and more and more, and I thought this is going to be really timely. Now, before I get started with the intro, I do want to remind you, next week, the Chamber's first luncheon of the year will be a TxDOT presentation. So the area engineer for the Department of Transportation is going to talk to us about projects that they are working on now. So if you want to ask when they're going to finish with the street in your neighborhood, or the FM that sends to your neighborhood, or when are they going to widen that FM, or whatever you might have questions for the area engineer, this will be your chance. We'll have him captive in the room. And I also had 2 people call me and ask me if we were going to video today's presentation, and the answer is yes. It will be available for people to watch later. So if you want to watch it again, you can, or if you know people who might be interested, you can send them the link. So with that, I'm going to go ahead and get started with our speaker today, Rick Summers. He is the founder of Midlothian Mining, which consults independent oil and gas companies that mine Bitcoin using waste and or stranded gas. I have no idea what that means. So stranded gas, that's gas that's lost out there all by itself and doesn't know how to get home.
That's right.
He has partnered with Upstream Data as his technology partner to manufacture mining rigs. Rick has been in the crypto space since 2016, researching and trading different cryptocurrencies and building crypto portfolios. In 2018, he researched and developed a project using a blockchain solution for the oilfield services industry. He is currently working on a $2 million Bitcoin mining hosting operation in New Mexico. In mid-2022, Rick and his partners will launch a commercial trust fund managing and trading digital assets for non-accredited investors interested in investing in the crypto space. Not since I got my bachelor's degree have I read something I had absolutely no idea what it talked about, but felt like it's something I need to know. Welcome to Rick Summers.
Thank you. Thank you, Ron. I appreciate you all turning out. So, as Laura mentioned, yeah, this is a timely topic, and so I went to her, and I've been involved in the chamber for I think a couple of years now, and I thought, you know, more and more interest is getting generated in this. You're seeing it a lot more in the media, and so I thought, well, why not just put together a presentation introduction for chamber members that you know, this would be interested in maybe looking at a topic we've seen on the news, because it's quite technical, a lot of pretty complicated, and of course, as you know, there are a lot more eyes coming on this space now from the regulators in Washington and around the world, and its impact, because as of today, I think it's worth a 2.3 trillion asset, all cryptocurrencies. That's the market space. So it's growing, and in 1 year it jumped over $1 trillion, and we saw that massive run up in 2020 during the pandemic, you know, when a lot of people had money, which everyone here paid for, stimmy checks, and I think they all went into cryptocurrency. But so I hope today is just an introduction. It's a 50,000-foot view to give you an idea on some of this space and what it is and its potential and how it can impact you as business owners. Now, at the outset, I had to say I had a bit of a technical issue. I'm a Mac guy, and I had to switch it over to PowerPoint. I wanted to give a live demonstration of how you can pay using crypto with an invoice, but I ran into some technical difficulty. I'll have to explain it and use the phone towards the end, and that was to show how you as merchants or business owners, how you could possibly use cryptocurrency as a payment methodology or down the line where it'll come. So if you can bear with me as I go through the presentation, if I run into technical challenges. being online for the last, since 2020, all the presentations have been online, so I forgot to bring the adapter, so that's kind of my fault, so I'm sorry about that. So yeah, we'll just jump in quickly here. So outline of today's presentation is basically I want to define some crypto terminology for you. I'm going to explain some crypto mining because that's in the news quite a bit, and then I wanted to give you, like I said, that explanation, live demonstration we came for a good or service using cryptocurrency. So we'll start off with actually the terminology of what is a cryptocurrency, all right? And an easy way to look at it is it's a ledger minus trust plus cryptography equals cryptocurrency. Well, what does that mean? Okay, well, basically, you know, a ledger is like a typical accounting ledger showing deposits and withdrawals, all right, that everyone's used. In the crypto space, we've digitized that, so a ledger. Now, traditionally, a ledger, you know, to verify those transactions in your trust, you would put that in a bank or a financial institution, or in the honesty of your friends or trading partners, all right? But that was based on a third party and a centralized control of handling your money, managing your money. You go to the bank and you say, oh, my bank's there, and my money's there when I want to withdraw it, or transfer it, or whatever. In the crypto space, what we've done is we've replaced the bank, okay, and then replaced it with cryptography. And what is basically cryptography? And all that is math, very complex mathematics, as comes along with computer code, okay? Combine these two together and you get a cryptocurrency. Now, for ease of argument, a cryptocurrency is what the term you hear a lot of, but you can also sub that in for what's called a digital asset. You're basically digitizing any particular asset. It could be real estate, it could be like tickets, which I'll get to, like music concert tickets, whatever. But it's an electronic form of representation of what you have. It's your asset that you own. So a part of this, they said, okay, so we have cryptocurrency, but now we have it exists online. We're going to need to use a crypto wallet, which you've probably heard. And that's where you store your cryptocurrencies like Bitcoin or Ethereum or any of your digital assets. And you access those crypto wallets through keys. And there's a public key and a private key. And what's the difference there? Well, the private key is your key, your access code. That's like a long string of numbers, alphanumeric numbers like this, that you're able to access your wallet and access your Bitcoin, whether you want to send that to someone or you want to trade it. And I'm going to refer to Bitcoin because it's the most prevalent in the media and everything, but this can apply to any of the other cryptocurrencies you may see on the market. And then there's a public key. And what's the public key? Well, it's the same thing. It's a long alphanumeric code like that, but that's the one that's broadcast if you want to send money out in the world, or you're going to do a transaction, you're going to trade on an exchange, you're trading cryptocurrencies. And that's the one you can copy and paste. And then behind the scenes, all the cryptography, the computer and the code, they're matching up those two keys to make sure that they're really you and that's the transaction. And that's how you access your wallet. Now, you don't have to remember this long code. They've made it easy, a lot of the wallet developers, so you remember 12 words. That's the one that actually, if you lose it, or if you're traveling, you lost your wallet, and you said, oh, I need money, instead of running to the bank, if you remember those 12 words, you can access that through a phone or a laptop, wherever you have access to your funds. So, but the catch is if you lose those 12 words or you forget them, you've lost your cryptocurrency, all right? Another thing, just as a side note, a comical note, so you might have heard that German back, I think it was 2017, when Bitcoin had reached 25,000, he had all his Bitcoin. He was an early developer and he mined it, and he had about $250 million and was stored on his hard drive. And he didn't, it was before the 2017 pop. I was sure it was afterwards. And he threw it in the garbage, the computer, before it popped, and it was worth 250, but he couldn't find it, and it was in the dump. And so that's something that, a little bit of a note about your crypto wallet, where you can store it on a basic computer like this, or on a phone, or on a thumb drive, which is called a cold storage wallet, which is the most secure way of holding that. But if you lose those 12 words, you lose your cryptocurrency. So it's very important to remember that. And it also places a tremendous amount of personal responsibility back on you to manage that, okay? Now, the important thing to think about cryptocurrencies as well is they don't exist in physical form. They're an electronic form of money or asset. So it's not like paper money. The other important thing is they're not issued by a central bank or authority, okay? And they're a tradable digital asset or digital form of money that's built on a blockchain technology that only exists online. So you might have seen these little metallic Bitcoins, they sometimes show in the media, those are just stamped metal. They don't represent any value or anything like that, all right? So the important thing here to think of is, well, the blockchain technology. So cryptocurrencies are tradable digital assets, all work on a blockchain technology. And what is blockchain? That's simply software, which is decentralized and open source public ledger that verifies transactional data on a public ledger, okay? And this information is stored on the blockchain and is stored on millions of computers around the world, which are called nodes. Those are the ones that participate and verify the transactions. The decentralized part of it is what makes the network secure. It's not controlled by any one central authority, okay? But here's the brilliant thing too, is everyone has access to that software. They can download it for free on their computer. And if you wanted to, and you had enough space, you could see the entire transactional history of all the Bitcoin that's mined since 2013, or for any cryptocurrency. But all you're going to see is that long alphanumeric code. You won't see who you are, you'll just see that. And that's what gives you privacy and security that's behind that. So this, if you think of a house, that's the foundation of all this technology. It's called blockchain, all right? So another piece, so we hear coins, like a coin, a token, cryptocurrency. So coin are basically those digital assets or digital form of money that operates its own blockchain and tracks all of its data. So it has its own blockchain. Again, it's not physical, it's not issued by a central bank. And here are some examples like Bitcoin, you have Ethereum and Dogecoin. You might have heard Elon Musk talks a lot about that and has been playing the markets owning Dogecoin. So that a coin is simply has its own blockchain. So to contrast that with a token, because you hear a token, this is where it gets a little confusing. But a token is simply someone that you rent or use another blockchain technology, somebody else's blockchain, if you're going to build your own project or protocol. Okay, so it's a little bit different from a coin. So a good way to think of this is Apple has its operating system, right? And so they've gone to all these developers and they say, you can build an app on our operating system. So Airbnb says, okay, I'll build an app and I will, my customer will be able to book their house on their next vacation, and then Apple takes a cut. But Airbnb doesn't have to invent a whole operating system. They just use their operating system and build their app so it's functional with it. That's what a token is. So instead of reinventing the wheel in a whole new blockchain, because it's very complex, takes a lot of technical skill, some developers are going to say, well, I want to do this particular project and I want to build a token that's tradable, and I'll just use your blockchain and then you get a cut of that. Okay, so that's a little bit of a difference. Now the thing about tokens, a coin is one thing only, but there are many different types of tokens. There's platform, there's security, transaction, utility, and governance. I'm not going to go into all of them, but I'll focus on one in a later slide, which is a utility token, and I'll explain a little bit about that and how they operate. Okay, so if you were to graph this out and kind of look at it to help you visually with what's going on here, so the technology is the blockchain, that's the foundation, okay? And then underneath that, you have a protocol, and the protocols are like Bitcoin, Doge, or Ethereum. So if you think of the internet, and you look in your browser and you see the HTTP, that's a protocol. So that tells you, if you type in an address like midlothianchamber.org, that tells the computer where to go to get information on the chamber. So all these things are, these coins and these blockchains are protocols. So they're developed and programmed a certain way so that they communicate and have a protocol that blockchain will function according to that programming and that map. Okay, so that's all that means. Okay, and then underneath that, you have coins, and I'll get a little bit more detailed coins down the line. And these operate on the blockchain, right? These protocols. And remember, as I said, coins have their own blockchain. So it's its own data network that use that. They're a little bit different from tokens. And then underneath that would be tokens. And again, tokens operate. So here's Ethereum. So think of this as Apple, and this is like Airbnb, and this is say American Airlines. They have their app, and they're operating off this protocol, this blockchain here. And then these are tokens, and these things, of course, are just like coins. You can trade them, you can pay for goods or services with them, but they operate a little bit differently, and it depends on different types of projects that people are doing. So, for example, there's a file coin, and what they're trying to do is build a token where everybody, if you want your computer, or if you have a series of servers that you want to create this collective server, kind of like Amazon has a cloud, Well, what they're doing is going to all these people saying, well, if you have extra computing power, we'll give you this file token, and you can rent out your computer space that you don't use, and you can get paid for it through our token. So that's an example of how one application that some of these companies are looking at. All right. Everything clear as mud so far? It's a little bit complicated. So before I mention the utility token, this is an example of a utility token. That's stable coins. Now, stablecoin is basically built upon a blockchain, okay? And the purpose of the stablecoin, why they come out, so how many people have traded any cryptocurrencies in here? Okay, so what's one common theme of that? They're pretty volatile, right? I mean, we've seen 20% swings in a day with them. So if you're going to use it as a currency, which the original Satoshi Nakamoto built the Bitcoin blockchain for, the Bitcoin protocol, was to use it in order to use it as a currency, as a means of exchange. But because of the volatility, if you're going to go buy a car or coffee, that price can jump, so it's not realistic. So they came out with stable coins, and what they've done is they pegged that to the US dollar or some other sovereign currency like the Japanese yen, and that because those currencies are stable in the market. So if you go buy a cup of coffee, or if you were to buy a car with a Bitcoin, your cryptocurrency, you know that that's a stable price. You could use these particular utility tokens to pay for that transaction or that item, and use that instead of using your Bitcoin, which you wouldn't want to do, because if it's an appreciating asset, you want to hold it because it's like a stock. You're thinking it's going to grow in value down in the future. So you use something like this. So that gives a little bit of stability to the currencies with these stable coins. Now keep your eyes on this, because this is what the SEC and the government regulators around the world are really concerned about, because they're worried if these things grow, how that will spill over and affect the traditional economy and the currencies of those tokens that are pegged to it. So let's get a little bit more eyes on this than some of the other Bitcoin. And the good thing about these is they have all the advantages of cryptocurrency. They have the security, they have the privacy, and the convenience of use of a cryptocurrency. So they're thought of as a cryptocurrency. And then, of course, they have the trusted sovereign currency. So the US dollar is the most trusted dollar around the world, or a trusted asset backed by the US government. So people that buy these, they say, okay, well, even if Tether goes under or whatever, I can switch it out for US dollars, and at least I have the comfort of the security of the US government backing this my dollar, and I'll get my money back, for example, if I use it. So I want to switch now to NFTs, what you've probably heard of. And NFT is an acronym for non-fungible token. So a good way to think of a non-fungible token is think of something that's fungible. So what's fungible? So a US dollar is fungible. There's nothing unique about it. You can exchange one US dollar for another. Same with Bitcoin. Bitcoin, there's nothing unique about it. You can exchange one Bitcoin for another Bitcoin. But the Mona Lisa in the Louvre, that's a unique painting. Okay, that's non-fungible. You can't find another Mona Lisa, all right? So that's an example. So how do NFTs apply? You've probably seen a lot in the media, and the NBA was the first professional athletic organization. Now you got Major League Baseball, NHL, NFL's looking at these things. And so so Steve Curry was one of the first ones to sell it. So he created an NFT, put it into a token on an open market, he digitized it, and it was a picture of him, I think, doing a shot, right? So that's a unique image that only exists if Steve doing that particular shot at that day. And he turned around and he said, okay, I can sell it. So somebody had a lot of money, said, oh, okay, I'll buy that from you, and I have that unique first NFT. But here's the great thing about it. Steve Curry owned the copyright and the reproduction rights of it. So he could still, even though the buyer of the original token has the original token, Steve can turn around and sell all that picture and make some more money from it. So the advantages you can see from this coming from artists, like musicians and that, right? So they create a unique song, they can sell it, somebody else can own the rights of it, but they have the reproduction rights and the copyright of that song, and then they can sell it, continue to sell that song around the world. And you see the advantage of the more money they can make for themselves, they take out the middlemen. A good way to think of this in the real world is the Beatles don't own their music. Sony Corporations owns the portfolio of music of the Beatles, but the Beatles get the royalties from that song every time it's reproduced or shown in a TV show or what have you. NFTs operate the same way. They're just digitized, so it's the same thing. So they're taking out the middleman basically, and get out there and market themselves and basically make more money for themselves. And NFT is a great thing. They can do artwork, music, concert tickets, real estate. That's becoming a huge area in NFTs right now, and items in the metaverse. Now the metaverse is that change from Facebook. It's the digital world. Everyone's old in here, so I don't think we're interested, but it's really big for young people right now. So you saw Nike recently went and bought space on the metaverse because they're selling Nike shoes to the avatars for people that want them. So it's the digital. I know it's hard to. I'm not into it either, but that's basically where there's a huge economic or money to be made in this thing as things move. Because there's gamers that's become massive all around the world. And so everyone's trying to scramble to get onto the NFT space and that. And some guys, like Kevin O'Leary from Shark Tank, thinks this is going to be bigger than Bitcoin this year and moving forward. So, how does all this work? Just quickly overview. So it goes all back to the blockchain. So like I said, any digital asset will say money for this thing. You want to pay A to B. You send the money and represent it as a block on the chain. It's broadcast to the network, to every computer, all those nodes. It comes in. It's validated that transaction is legitimate. So A and B have their two keys from the crypto wallet. Yep, it's valid, so it's not fake. They record it, it's uploaded to the main blockchain, and then the money is transferred to B, and it happens really quickly. Now, I'll get into the traditional blockchains. Well, I'll save that for another slide, actually. It'll make a little bit more sense. But that's basically the 50,000 foot view and flow of how this thing works and a visual representation. Now I'd like to quickly jump into mining, and hopefully this video works. So this is an embedded video. So how does it work with these coins, right? Well, Bitcoin, the protocol, put a limit of 21 million, okay? And the reason for that is it becomes a non-inflationary asset. So why do we have all this inflation today? Because the Fed went crazy and the government printed money like nobody's business. We got 9 trillion now on the balance sheet, and that's the problem when you print too much money. Right, it creates inflation. So the original guys or person or group of people or woman that developed Bitcoin said we're gonna have 20 million, so it's a non-inflationary asset. But they mine it, and that's how the computers I told you, the nodes that participate, they verify the transactions, and they get awarded if they're mining a Bitcoin. And at present, if you solve the block, and what these mines do is they basically solve very complex mathematical puzzles, okay? And these are the mining rigs. Here, that's an example. These are stationary ones, and they can operate off of electricity or natural gas, nuclear power. Anything that generates electricity is what can drive these computers. Any renewable energy too, solar and wind. They solve the mathematical puzzles. If you solve it, your computer, your mining pool, you get awarded those 6.25 Bitcoin. So that's the reward that you get for participating in validating transactions. Okay, and I'll just see if this is going to work here. It's not. Oh, no, it's not. Okay, let me try and go back and see if it is for a moment. No, I didn't. Okay, sorry. So I was going to give you.
Get out of presentation mode and then see if you can click on it for it. Sometimes it works. You hit the escape key.
Hit the escape key.
Oh, okay.
Go back one.
Sometimes that will work.
Oh, you need to up at the top, enable content.
Where, sorry?
That logo, up, down, and the yellow strip.
Oh,
Not above the T.
There you go.
Yeah.
Okay.
Welcome back to another video. My name is Zach Hartley, and today we're going to be filming a video where we tour the Hut 8 mining facility. We're going to be mining for some...
So Hut 8's a publicly traded company. You might have heard that hum in the background. That's all the computers that are working to solve those mathematical puzzles. And I'm going to skip forward just to show you what it looks like inside. Now this is big capital. It takes a lot of money to run these operations and to mine these. So let's just give you a quick example. So those computers run 24/7, 365. And that's all they are. And they're solving the mathematical puzzles, which gets every Bitcoin that gets mined, the difficulty just gets a little bit more difficult each next one. And so it takes a lot of computing power to generate that.
So there's fans in here.
To solve that and get the reward. But you can see it's lucrative because at 60,000 a Bitcoin, it pays to mine these things, right? And of course, there's some guys who it's going to be 100,000 at the end of the year, 200 million, and figure in 5 years it could be worth $5 million per Bitcoin.
Who makes up the mathematical equation that they're solving?
The original the original, so it wasn't the original guy, it's been built on decades of cryptographic math. It was mathematicians and computer science. So it's the math that was the foundation of it. It was basically mathematicians that have solved these cryptographic puzzles. And so it's not invented, it's been a math that's been solved, just like quantum mechanics, right? Or 2 + 2, right? You decide it's 2 + 2 = 4. Same thing with cryptography. I'm not well versed in how it's extremely complex, the mathematics. I've looked at it.
Like they're inventing something out of thin air.
They're
I'm sorry?
not. It's one of the things that's shocking about the original. I'm only talking about Bitcoin code is that the original code is just like I'm gonna butcher the code language, but it's just a basic code language. And for something that has $1 trillion market, it's shockingly short. It's what, a page and a half?
Page and a half.
Yeah.
But the cryptography,
On top of it's massive at this point.
to try and break that, one mathematician did a calculation to the power of, so a string of digits to 22 or 32 or something. So it's basically more stars than the stars we find in the Milky Way and the Andromeda galaxy would take that much computing power to solve, to crack the cryptography of it. So it's really complex, I know. And like I said, I'm not an expert in the math part of it. So, but I put my faith in it because it's the math, and that's what gives it the security. Okay. So that's an example. So there's been 19 million Bitcoin mined already to date. And I'll just quickly jump through because I know there's time, so we're going to get to Q&A. This is an example of token mining, GPU mining. It's less.
So let's check out my mining farm at my apartment. This is an August 2021 update, and I'll be over my mining 100 XT mining rate.
Oh, I didn't play. Okay, so if you can see that, it's like a smaller operation. It doesn't require as much computing power. It operates off a bit of a different system called proof of stake. I won't get into it because it'll be too confusing for you. But there's a lot of people around, and I've met them in the mining community that are still mining, Bitcoin too, but are actually mining more different cryptocurrencies at home. And there's one young guy I read recently, and his sister started, and they're making about $30,000 a month for buying different cryptocurrencies, so it pays. Catch is the IRS will tax you, even though you may not sell your cryptocurrency, they'll tax you in the year that you mine it. So that's the downside. So you got to be aware of that if you guys want to get into mining. I'll go back to the presentation over here quickly, and we're almost done. I just want to give you an example of that. And
Okay, so let's check out my mining farm at my.
okay, so how does all this apply to your business? Okay, so the power of what cryptocurrency is like how many of you are merchants or accept Visa or MasterCard in your businesses? So you're well aware of the transactional costs that Visa and American Express pay you guys. It can be anywhere from 1.5% to 3.5%, plus fixed costs if you use a debit card, 30 cents, a lot of money. So the advantage of these cryptocurrencies is you can use them as a payment layer, and the cost can either sometimes be zero or as little as a few cents. So there's massive cost savings for that. Plus, it's verified, the transaction rate, and it's in your account right away. So you know if someone pays you Visa, your transaction, that's money's not in your account right away. It's got to be verified by the banks and the Visa network, and it can take 3 days. International can take anywhere up to 10 days, or an international wire transfer. These things are point-to-point, seamless using the payment protocol of these, the Bitcoin network or the Ethereum network, and you can get paid and have funds in instantaneously at a much reduced cost. Now, I wanted to show you an example of paying an invoice. But I had some difficulty. I can't show it. I had it all set up. But one thing you can do, and well, first I'll explain the story of the Lightning Network. So before I told you, blockchain technology is really slow. Bitcoin can only handle 2 to 7 transactions per second. The threshold is Visa, 24,000 transactions per second. Some blockchains have already beat that enormously. The Lightning Network is if you think of it as a cake, here's the main layer of Bitcoin, and then they built the Lightning Network on top, and the purpose of this was to speed up transactions. And all it is you can have large volumes of financial transactions at a high rate of speed. And that now makes it more real that if people are going to go buy a cup of coffee or go to McDonald's or whatever, which people are doing in El Salvador, they can use the blockchain network and pay for it. It's instantaneous. But how does it work? Because it's 10 minutes for that block. So basically, just one last video, and we're almost done, guys.
Lightning Network is a second-layer payment protocol that operates on top of a blockchain. It was developed by Joseph Poon and Thaddeus Drya and published in a Lightning white paper back in 2015. The idea behind Lightning Network is to solve the scalability problems faced by Bitcoin and other cryptocurrency blockchains by taking transactions away from the main chain and instead making use of user-generated bi-directional payment channels.
Okay, so that's what I was trying to get at. So what they've done is taken it off. So you and I, if we were going to say I was going to send you money, some Bitcoin, we would open up this payment channel from our app, and we could pay it the money and send it to you. And then once that's verified and it's verified, it would later be uploaded to the main ledger, and then it's locked in place. Okay, so that's why they did it, because the original Bitcoin, a lot of these things weren't scalable. You can't use them day to day, and the whole purpose of Bitcoin was or cryptocurrency, to be a form of currency, a medium of exchange.
So would a term be? I've been with you. The Lightning Network thing confuses me. So it takes it Lightning immediate, and would the word be reconcile? It reconciles it later.
That's right, exactly.
Okay.
It reconciles it after. Because the reason why is if there's a problem and you need to reverse the transaction, the two parties can do that.
Okay.
So that's why there's that delay, because so you bought something by mistake or you wanted to return an item.
Yeah.
That's why it can be returned and then verified later and then uploaded.
Yeah.
So yeah, exactly.
So is it like a Venmo layer?
That's right, exactly. But the difference is, sorry guys, I'm a little thirsty, is Venmo person to person is free, or Zelle, but Venmo charges you if you're a business and you want to accept Venmo or PayPal or Zelle. So it's just like using Visa. If you use the Strike app and do a payment in cryptocurrency, it's 1 cent or 2 cents, depends on the volume of the transaction, but you're literally talking pennies, right? And if you do a lot of credit card transactions, your business for a year, think about how much money you could save in a year that's not going to Visa. You're not paying Visa to use it anymore. That money's going into your account, right?
So I'm a business owner as well, and we charge a fee for large transactions to our customers. How many other businesses in here charge a percentage fee to your customers when they're doing a big transaction like $3,000 or more?
Oh, thank you.
Well, for credit cards, you kind of have to.
Yeah.
But here's the catch. There's a law in Congress, because I had mine, you cannot do that. So legally, as a merchant, you can't charge your customer the transaction fee for your credit card. A lot of businesses do, right? But legally, you're not supposed to. So I've known business owners that don't charge because they don't want to get in trouble with the law. This totally removes it. And here's a brilliant example of this. There's a guy listening on his podcast. He was flying over the Atlantic Ocean, and his buddy, one guy was going to Miami from England, one was going to Miami, the other guy was going to New York. They both said, hey, let me buy you a beer. They chat online because they logged online through the internet service. They bought each other a beer, sent money through the Strike app, and it was instantaneous because it's using all the infrastructure of telecommunications is already there. They're just using the infrastructure through the payment network because of all that cryptography, and they're able to buy each other a beer on a plane at 38,000 over the Atlantic Ocean. So this is where the future is going, all right? Now, I wanted to just quickly give you, I do apologize because I know one of the big things is the live demonstration, but I had my business partner send me an invoice to show you how I could pay it scanning a QR code with my phone and how fast he would get it, and then he would send it back to show the receipt and the invoice compared so you guys can see from using an online source like your computer, or you can use the app to do it. And so basically, he sent
the Strike app?
The Strike app, yeah. So he sent an invoice, and I can pay it. So basically, for $5, pay, I confirm, and then it's sent. It's gone. All right, didn't cost me a cent. He's going to receive it. Didn't cost him a cent. So how does this apply to you guys? Well, you can literally take. So can I use your phone for a second? So everyone's been to Starbucks. You see the little the terminal. Some of them have cell phones now, and they're locked in place. You could set that up as your merchants. If you had a retail business, and someone came in, I could do it with my QR code. We've all gotten used to QR codes because of the pandemic, and you basically scan it, and it's instantaneous, and you've got money in your account immediately, and it's confirmed. And you don't have to worry about Visa. There's no middleman. It's all trusted because it's on the blockchain network. It's recorded, so if there's a problem, you come back to it, and then once it's done, it's verified, it's done, and you carry on. So there's you got the security, you've got the privacy, and you've got the cost savings of cryptocurrency. And this is where this is going. And I thought this would be a great presentation. So, and how it applies to business owners for you guys, because I think there's some massive changes coming down the line, especially with decentralized finance And I wanted to give you that, it's that easy to use, and I wanted to give you an example of that. I'm sorry I couldn't go into further detail, but that's how I think most people have to start viewing this stuff. A lot of it's trading and investing in, but as actual business owners, these payment layers are going to be much more efficient than Visa and Western Union, like El Salvador. People used to wire money because there's a lot of expats here, El Salvadorians that live in the States and send money back home to people. And there's always a problem. You have to drive into the Western Union. There's gangs there's a recorded incident of gangs taking money from. Now all they do is if they have a mobile network connection, they can send it instantaneously, and their family down in El Salvador gets it. So anyway, that concludes my presentation. Sorry. Yes.
Okay. Okay, so someone gives me, my client or customer pays me $10, right? That's $10 of US currency in Bitcoin form, right? Okay, so let's say I leave that in my little Coinbase or whatever I'm using, and I have that $10, but what if the market dips? Now, that physical good in real life that I sold for $10 that's sitting there, if I didn't take that out and turn it into US dollars and put it in my bank right away, it's at the volatility of the market?
That's right. So that's why you might, depending on the item and what you want to do, is use a stable coin, so that you transact in that and that you're not losing money. Oh, sorry. Oh, yeah, sorry about that. And the other thing too is Bitcoin is divisible. So one Bitcoin is 100 million, what they call Satoshis, named after the founder. They call them sats. And so what I just sent him is $5 converted into sats is 0.000421 or whatever it is. But you'll see it on the app, it'll change automatically. So my warning to you is you don't want to necessarily transact in Ethereum or Bitcoin right away. If you want to hold it, they call them holders, because it is an appreciating asset, and some people believe it's a hedge against inflation. So if you hold it, you may want to hold that, but convert it to Tether for your business or USDC, and that's pegged to the US dollar or other sovereign currency. Gives it stability, it's not volatile, and you can transact and you don't lose money.
Second question. Can you give me like 3 coins to watch?
This is an investment advice.
What are you watching?
Bitcoin, yeah, definitely. Ethereum is another part of the network. And I would say Solana, because Solana's, they've got some technical challenges, but here's the thing. They built their transactional network was I'm going to get the number wrong, but it was an incredible amount of transactions that they were able to process in a second. It was so many that actually the network broke, basically. So they've got all these developers like figuring this out, but if they can get that, which is just a technical challenge, I think they can solve it. That's a massive play for that particular token.
My third question and final question is, what are the apps that I need on my phone, in your opinion? I have Coinbase. I started with Swan Bitcoin, just to not have the volatility. So what are the apps that I should
I recommend right away you get a cold storage wallet, which is a thumb drive, because that's the most secure, because if Coinbase is hacked, you could technically lose your cryptocurrency, all right? They're not hacking the Bitcoin protocol, they're hacking Coinbase's centralized systems. So they have that's storing that. So that's why I recommend you get a thumb drive. And secondly, get one for your phone. They have the Coinbase wallet, but I use Blue Wallet and then Strike as my other day-to-day transactions for that. So that's, if you're using day-to-day, I would recommend using those 2 particular apps if you're going to pay and start conversing in transactions. But definitely get a thumb drive, and I'll tell you the name of it. I'll see after a couple of good companies that have it, and store that somewhere. Maybe buy 2 of them. If you really got a lot of Bitcoin or cryptocurrency you want to stick on there, put one of them in a safety deposit box and keep one at your house just in case.
Trezor's real popular for cold storage. Trezor, Trezor.
Trezor, thank you.
Yeah.
Chris.
Now,
There's a bunch of them.
with,
Trezor's
you've got all these different types of cryptocurrencies, obviously, like you said, Bitcoin, you got, whatever other ones you said, Shiba Inu and all these other ones. Hell, you even got a Let's Go Granny cryptocurrency now. It seems like the market is just getting quickly saturated with so many different cryptos out there. What's a simple foundational look at as far as like quality or characteristics for Bitcoin that you want to look forward to invest in?
First thing is you want to look at the community, the development. So Bitcoin has by far the largest committed community developers. These are not centrally controlled people that are working on the network verifying transactions. So that's the first thing. How big is the community? And secondly, did the founders, how much float do they have of their token or coins? Have they released everything? Because then it's a cash and grab and they're going to run. But if they have a lot in reserve, then you know they're committed to the protocol of their program and they're going to release more of their coins or tokens. Just like stock, like a company, right? They'll release so much, but they'll keep a stock, publicly traded company will keep so much in reserve. Same thing. So then you know at least that they're not doing a cash and grab and go. So those are two sort of fundamental values you want to look at with any protocol that comes in. And just as a side note, I'll say, like my take on this, and again, it's not investment advice, but I think we've overprinted so much money, and the Fed's in a real bind because they can't necessarily raise interest rates too hard. They got to stop the quantitative easing buying the bonds. So they're in a real pickle because they could really slow down the economy, and they're going to talk about 4 interest rate hikes here in 2022. There's been so much money pumped into the traditional economy and the cryptocurrency space, and it's kind of like the 90s again. A lot of these coins and tokens, they're going to go bust just like the internet companies. That's my working thesis. You just can't have that much cash flowing around in the system. So I think that when the traditional economy takes a dive, or it's going to happen, it's going to impact the crypto economy. And if it's really severe, a lot of those projects will get wiped out because all these venture capitalists are going to be running for cash. Like they're going to go back to what they know, right? So that's just a working thesis. You can have a different opinion. That's just my particular opinion. So if you're going to trade in 2022, I'd just be a little bit more careful about what you're buying out there. Don't get caught up on the fear of missing out. There's a lot of good projects and a lot of potential in these tokens or coins to make some as a good investment. Yeah.
Well, Rick will be around. We need to close out, but Rick will be around afterwards.
Yes, absolutely.
Feel free to come up and talk with him.
Sure.
Tell us how to reach you.
Oh yeah, so I can be reached at my email, of course, which is rick.summers@midlowmining.com.
Spell Summers.
Pardon? Oh, SOMERS. I'm also on Facebook, but it's under Richard Summers. You can find me there, and I'm also on Twitter at rsum at 2001, and my Twitter or Telegram handles rsum2001.
And of course, you're a chamber member, so we can find
And a chamber member, yes, exactly, yeah. So, thank you. I appreciate it.
Thank you very much, Rick. Thank you very much. Well,